Hello everyone. In the week ahead video, we discussed this. On Friday night, Trump posted on his social media threatening 100% tariff on China. Then over the weekend, China responded with verbal warnings, and now on Sunday night, Trump softened his tone. So what does this mean for today's Indian market? And in addition, HCL Tech results are scheduled today. So what's the analyst expectations? All we are going to discuss in this market report video for today, 13th October 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, for everyone benefits, quick recap on what really happened. On Wednesday night, China threatened that they are imposing large-scale export controls on virtually every product they make using rare earth minerals and critical materials, some effective from November 1st and most from December 1st. So, in response to that, around 9:30 p.m. Indian Standard Time last Friday, Trump threatened that he is going to impose 100% tariff on all Chinese goods, and in addition that US will impose export controls on all US-based critical software. As most of us know, this is a massive re-escalation of US-China trade war, which crashed the US market heavily, wiped over $2 trillion of assets in one single night. I saw one research firm jokingly tweeted, Trump posted 504 words and each word cost the US economy $4 billion. Almost half of India's equivalent GDP erased in one single night. In absolute numbers, S&P 500 crashed 2.7%, Nasdaq fell 3.5% and Dow Jones dropped nearly 900 points or 1.9%. This was the worst US market sell-off in last 6 months. Now, regarding the ADR's reaction, both the IT stock ADRs fell 2 to 3% and calculating the arbitrage including dollar premium also showing negative 2 to 3% difference. But interestingly, both the banking stocks closed positive. However, if we calculate the arbitrage, it's showing no fresh movement at all. Reliance GDR is showing negative 0.5% arbitrage difference. So in short, IT stocks are showing negative arbitrage, banks are flat, which means IT stocks might open negative, but banks might be neutral. Now the important question is, did China respond over the weekend? Yes, China's Commerce Ministry warned with firm retaliation that they will not shy away from defending their interest. However, there was no counter tariff implementation or retaliation announced, it's just verbal warnings for now. But on the positive side, more importantly, Trump himself softened his tone over the weekend. On Sunday, Trump posted on his Truth Social like not to worry about China, all will be fine, and Chinese president just had a bad moment. More importantly, he said this, USA wants to help China, not hurt it. I mean, on Friday night, he threatened 100% tariff and cancelling the Xi Jinping meeting. But over the weekend, he is saying, don't worry and we want to help China. So, Trump is now trying to tone down, as I said, which is a positive sign. And in response, at present, at the time of this video making, all US future market is trading positive. Dow Jones and S&P 500 futures around 1% up, whereas Nasdaq futures increased 1.5%. This shows the situation is fluid and we need to monitor any further developments today. Because if China announces any retaliatory measures today, then market will react negatively. But if both sides continue to soften their tone, then I think market might recover. As a summary, global momentum turned very negative on Friday night, but over the weekend there are some signs of de-escalation, hence it's mixed. Now, because of all this negative global momentum on Friday night, GIFT Nifty Indian IT ADR reaction for now all indicating a gap down opening of around 150 to 200 points. However, this might change based on how Asian markets reacts today morning, and as we discussed, US future market recovered almost half of its Friday loss. Then again, despite all this global negative news, there was a very positive development domestically. I mean, in the cash market on Friday, both FII and DII were net buyers for the fourth straight session. FII net bought for 460 crore rupees and DII net bought for 1700 crore rupees. So this is really a positive sign. After many weeks of continuous FII selling, they have turned net buyers for 4 consecutive sessions now. Moving to the participant-wise open interest analysis, in the index options on Friday, only 3% new call option open interest were added, but 25% new put option open interest were added. So the PCR ratio increased significantly from 1.06 to 1.29. This is a positive sign, and stance wise, let me compare Thursday and Friday positions. On Thursday, clients were having net 4.2% open interest position on the bullish stance. On Friday, this increased to net 5.9% open interest favoring the bullish stance. So retail traders increased their bullish positioning. Then FII on Thursday was having net negative 7.6% open interest on the bearish stance. On Friday, they reduced it to net negative 7.2% open interest. So FII reduced their bearish stance slightly. So to some extent, which is also positive. Proprietary traders on Thursday were having net 3.9% open interest on the bullish stance. On Friday, that dropped to net 1.9% open interest. So proprietary traders reduced their bullish positioning. They became more neutral, which is a bit of worry. Overall, retail traders are bullish. FII is still bearish but reducing their bearish stance, and proprietary traders are neutral. Then, as per stock open interest, Tata Elxsi, Manappuram, Zydus Life Science, Power Grid, Hindustan Zinc, Oracle Finserv and Mankind Pharma are some of the 53 stocks that got an increase in open interest along with a negative close, indicating the short build-up. On the other hand, Yes Bank, Maruti Suzuki, Divi's Lab, SBI Life Insurance, ITC and Indian Bank are some of the 66 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. Now about the things to look out. First, earnings wise, HCL Tech, Anand Rathi Wealth, Den Networks, Just Dial and Lotus Chocolate Company are some of the listed stocks scheduled to release their earnings today. Here, I just like to highlight about HCL earnings, like what the market is expecting. This is the snip from Bloomberg estimation. They said on yearly basis, revenue to increase 4% and net profit to increase by 10%. EBIT margin wise, they are expecting more or less the same. But the very important thing to notice, FY 2026 revenue growth guidance. Their earlier guidance was 3 to 5%. So market is expecting the same guidance. But if HCL increased the lower end by 50 basis points to 3.5% to 5%, then I would say it's positive. Anyway, so today and tomorrow HCL Tech will be on major focus, and this will set the tone for the IT sector for the week, since as we know this Thursday Infosys, Wipro, L&T Mindtree are all scheduled to release their earnings. Then macro wise, during our market time, there is nothing major that I know is scheduled and could influence our market. Whereas after our market close at 4 p.m, India's September month consumer inflation is due to release. Coming to technical, last Friday Nifty opened flat but immediately gained strength and had the breakout, then was positive throughout the session, finally closed near 25,300 mark. Thus on the daily chart, Nifty formed a bullish candle with a minor upper shadow, indicating a positive trend despite selling pressure at higher level. As we discussed earlier, it had the breakout of the recent consolidation phase. In addition, the trend continued to stay positive as it sustained above all critical moving averages and as well as the midline of the Bollinger Band. Furthermore, RSI moved above 60 mark and MACD maintained a bullish crossover. So from technical perspective, all looks favorable for a further upside in the short term. Hence, on the higher end, Nifty might move towards 25,500 to 25,550, while on the lower end, immediate support is at 25,150 to 25,100 zone. A fall below this zone could weaken the trend. In case of Bank Nifty, similar to Nifty, it also opened flat but immediately rebounded and was positive throughout the session, then closed above 56,600. Thus on the daily chart, Bank Nifty also formed a bullish candle with a minor upper shadow, indicating a bullish trend despite some pressure at higher level. In addition, it decisively closed above the falling resistance trend line near 56,300 and also closed at the upper Bollinger Band with RSI at 66 and MACD maintaining a bullish crossover, all indicating continued strength with the possibility of further upside. Hence, if Bank Nifty manages to follow through above the 57,000 level, the pullback could extend towards all-time high value of 57,600 level. Regarding the options front, the maximum call option open interest was at 25,500 strike, followed by 25,400 and 25,300, with maximum new call option rating at 25,450, 25,350 and 25,400 strike. Whereas on the put side, the maximum open interest was at 25,200 strike, followed by 25,000 and 25,100, with maximum new put option rating at 25,300, 25,250 and 25,200 strike. Thus, from options data, it indicates that Nifty is likely to face resistance in 25,400 to 25,500 range, with support in 25,200 to 25,000 zone. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.